Hello guys, welcome to another weekly breakdown video. Today I'll be breaking down the second week of August, as you can see, which will start from 5th of August, and you can clearly see here, this is the demand zone that I've marked. This is the supply. Obviously on the weekly time frame you mark the demand, supply, fair value gaps, targets, and market structure shifts, right? So those are exactly what I've marked, and you can also argue. Now starting with the weekly time frame, the callouts I will show you as the trades go on, okay? So stay tuned for that, and also I will take a screenshot at the end of the video. So clearly we can see the market is now bullish, making higher highs, and now it is in the higher low phase, right? You can argue there was a weekly fair value gap right around here which got filled to the T here, right? And also there was a fair value gap here somewhere around here which also got filled to the T. 80%, 90%, 90 to 95% of fair value gap got filled here, as you can see. So my weekly bias going on the next week is bullish. But also you can argue there is a weekly demand zone right around here which didn't got mitigated yet. This is the demand zone from where huge buying happened, and this is the higher low phase. As we know, the market cannot go up forever. It has to move. It does move in higher highs and higher lows. So right now it is in the higher low phase, so we can anticipate a higher high, the starting of a higher high after filling up those fair value gaps, right? So going on the next week, my bias is bullish on GBP USD. So now to confirm my bias, I go to the DXY, and when I go to DXY, I can clearly see the market is bearish right now. Clearly we can see higher highs, higher lows, lower highs, lower lows, higher highs, break of structure right around here, a beautiful retracement. If I draw the Fibonacci retracement from here till here, a beautiful retracement here to the 76.8% retracement, and then a bullish market structure from this area somewhere around here. So on DXY we can clearly see the market has been trading between this low and this high. So that is why there is no market structure shift right around here. Because of my technicals, that's how I mark the market structure shifts. But obviously there will be market structure shifts on the daily, because a move like this on the weekly can be a higher highs and higher lows on the daily, right? So that was what I was anticipating. On the weekly time frame going in the next week, my bias was clearly bearish. On DXY it's bearish, and on GU it's bullish, right? So that is when I go to the GU for the daily bias. On GU we can clearly see now the weekly bias is bullish, so obviously I'm looking for buys. And on the daily time frame, if I go, there is a daily fair value gap right around here. This much of fair value gap is left. So obviously going on Monday, my bias is bullish because of how this candle closed right around here. My weekly bias is bullish, and according to how this candle closed right here on Monday, it would be more logical to look for buys rather than sells. So on DXY also a huge bearish candle closure on Friday, as you can see. So obviously on Monday I trade with the trend, so obviously on Monday I will look for sells on DXY. So if I'm looking for buys, that is when I go to the 4-hour time frame. But before that, let me quickly show you this demand supply. Obviously I mark the supply demand, the same sort of thing on the weekly and the daily, but on the H4 I don't mark the supply and demand because it is interchanging so quickly. Because on the 4-hourly, a demand can get respected, or a demand can form in that week itself, right? So we have to adapt. From 4-hourly time frame onwards, I start to adapt the zones, but on weekly and the daily I mark before the market opens on Monday. So on the 4-hourly we can clearly see the market was bearish, lower highs and lower lows. You can argue that huge amount of buying happened here on Friday. So, and also there was a pullback from this sort of supply zone right around here, right? It is so easy once you understand the basic fundamentals of this strategy of trading. It's so simple. It's not hard at all. So on the 4-hourly I couldn't see any sort of demand zones to buy from, so that is when I go to the H1 time frame. On the H1 time frame you can argue that there is a demand right around here made on 3:30 p.m. Indian Standard Time, right? There was huge amount of buying happen from this sort of area. So if I'm looking for buys, according to my strategy, I look for demand zones, and whenever I'm looking for sells, I look for supply zones. So obviously I waited for the Asian range to close. The 230 candle was to the upside or downside, very tricky, but the market, when the Asian range opened, went to the downside, sweeping this liquidity here. So obviously I'm looking for buys. There was a H1 fair value gap right around here, so obviously waiting. Now it's a waiting game right here. Huge amount of bearish momentum right around here on Monday, I don't know why, as the market is also crashing on August, as we know. And if I show you the news, okay, I forgot to show you the news, right? So on Monday there was no news, Tuesday there was German prelim CPI, and this was the NFP week. Sorry, no, it was not NFP week, this was last week, sorry, my bad. This week there was Monday there was ISM services PMI, Tuesday, Wednesday no news, Thursday unemployment claims, and Friday there is no news. So it was a very, very attractive week to trade from because of the news. There was no sort of news, and obviously if I'm looking for buys, this H1 fair value gap got filled to the T. And at first I was looking for buys from this sort of demand zone, but this demand zone was not strong enough because the bearish candle was not looking clean enough for me. So I marked this sort of demand right around here. So my timing is 7 a.m. to 10 a.m. UK time, right? But on this day it was very, very tricky to trade the MAC model. With experience you will get to know when you should trade the MAC model and when you shouldn't. So we can clearly see the demand zone got mitigated to the T, and then a huge amount of buying happened from here on 12. I took a trade, I believe, right around here. It was a 1:10 risk to reward. Beautiful. It is our setup, bro. Even when the bearish momentum is so high like this, if it's in your demand zone, you have to monitor that zone, because obviously, right, huge amount of buyers tick in the market the previous day. So it is high probability for the market to buy again from that area, because the big banks, obviously they don't want to change their positions just for the sake of changing it, right? So if they have entered a huge vast amount of orders on that zone, so next time also it makes sense for them to take the trades from the same zone. And also it was SMT here with Euro USD and GBP USD. Clearly we can see on Euro it took this high right around here, which I have marked as SMT, but I have unmarked it. And on GU it made sense with the buyers being bullish, so much sense to go and take this previous week high. Maybe that was the previous week high. No, that was not the previous week high, but that was the high which Euro has taken. So I entered the trade somewhere around here, and it was the MAC model, as you can see, the 12 p.m. in the 12 p.m. candle, and then the rest was history. Literally we got a 1:10 risk to reward. Obviously on the live markets my entry would not be perfect like that. Maybe my entry would be here, maybe my entry would be here, but I will take trades which looks like this in my timing, right? Whenever there is a trading opportunity in my timing, I take the trade, because and let the probabilities play out. At the end of the day, it's the probabilities which is gonna make you profitable, right? So this was the trade I took on Monday. Monday was a very beautiful day, but I will not journal this trade because it was not one of the cleanest. But you can see the demand zone that I've marked on H1 got mitigated perfectly. As you can see, huge amount of sellers came in the market right around here, and then a beautiful rejection from this demand zone, and then the rest was history, right? So even if the market is in your opposite direction, like if you want to look for buys and it's very, very bearish before entering the zone, but after it enters the zone you have to monitor that zone, because anything can happen in the market, right? So clearly we can see we got a beautiful buys on Monday. That is when I go to Tuesday. Monday was beautiful, everything we want to see, our setup, A-class setup, beautiful. Demand zone got mitigated, and yeah, mate, if something like that happens on the live markets, I'm taking a trade regardless of what happens, meaning even if I win or lose, I will let the probabilities play out, and if it's in my timing, right? So Monday closed as a bullish pin bar right around here. Tuesday, now I will look for buys again because of the GBP USD candle closed. And on USD, on the dollar, we can clearly see now there is a daily fair value gap right around here. There is a demand zone which didn't got respected here. You can see this demand zone didn't got respected on DXY, so it also makes sense now to go and fill up this fair value gap, and also makes sense with the GBP USD to continue to the downside. So on Tuesday my bias was a little bit tricky, as you can see, and if I go to Euro, it was clearly bearish because the sellers literally were able to let the market come to the downside. So maybe, and also on Tuesday there was no news. On Tuesday I didn't do the trade, I believe, and on Tuesday I did something like this. So going on Tuesday, we can clearly see the market was bearish on GBP USD. Obviously if I took a trade with the bias being bullish, I believe I would have lost it. I don't know, but obviously my bias was bullish on GBP USD. Now we can clearly see the fair value gap on the daily time frame got filled to the T, so I can delete it, and now it has entered the daily demand zone, right? So going on DXY, we can clearly see, if I compare my bias on DXY, it is looking like a bearish candle now. It was a bullish kind of candle, the market went up, and now it's showing some sort of bearishness on going on Wednesday, right? And also GBP USD is bearish. Wow, GBP USD is bearish, DXY is bearish, so it's a very, very tricky day to trade again, right? So Euro USD was also kind of bullish, So obviously if I was looking for something on Wednesday, I would not look for anything, I believe, because of how the candles were closing. And on the H4 time frame, you can see the market was bearish from this low and this high and this low, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, some sort of accumulation. Now this is the high that caused this new lower low right here. The previous week low has also been swept, so huge amount of selling happened here. So obviously GU, my bias is bearish because of how this H4 time frame is looking like, right? So I will like to continue with the bias being bearish. So that is when I go to the lower time frame to look for sells. And I believe on Wednesday I didn't do the trade, I believe. Did I? Okay, so you can clearly see on Tuesday my bias was not clear. So whenever my bias is not clear on Tuesday, I didn't do the trade. Simple as that, right? So whenever your bias is not clear in the markets, please don't trade, because it doesn't make sense. So clearly now we'll wait for the Asian range to close. I'm looking for sells, I told you guys, right? So I will look for sells from this sort of M30 supply zone, because on the H1 the supply zone is here. Literally the Asian range of Tuesday was huge bearish. The market only went down, the market crashed to the downside, and you can see some sort of accumulation happening here. There is huge amount of sellers right here on here, liquidity. So the market can go up, sweep this liquidity and make a move from the closest supply zone. Why the closest supply zone? Because the previous day's volume was very high. The previous day's volume was very bearish. That is why I am looking for a sell opportunity from the closest zone possible. So in this case the closest zone on the H1, obviously it's very high. So on M30 we can clearly see there is a supply zone right here on here, which was made on 130 on Tuesday. So obviously I will wait for the Asian range to close. The Asian range close something like this, and after the Asian range is closed, if I'm looking for sells, I will look for Asian high sweep, and then either the MAC model or my Asian range liquidity sweep model, whichever will give me the opportunity, I will take that. But on this day there was, look, the MAC model is a high probability trade only if there is no zones to trade from. Meaning, whenever there is no zones to trade from, that is when you should look for MAC model. But in this case there was a beautiful zone on the M30, as you can see. So why to look for MAC model, right? If you get it, you get it. But obviously if the supply zone got mitigated and this previous structural liquidity here got swept, it would be a high probability trade anyways. So I was looking for something like that. It was an M30 zone, so I was looking for an M30 rejection. As you can see, on London session the market went down, it got manipulated. As you can see, there was inducement right here on here. Inducement, the market swept previous structural liquidity, went up, mitigated this M30 supply zone at our timing, I believe. Okay, so it was not at our timing. So Wednesday we won the trade, but obviously on Wednesday we can clearly see the bias was not one of the clearest, because DXY and GBP USD were doing the same sort of thing. So Wednesday also I will not journal this trade, because yes, you can argue the market, we won the trade, but obviously if I took this trade, I would break my trading plan. I would take the trade when it was not at our timing, which is 7 AM to 10 AM UK time, and obviously it would be a winning trade, but obviously in the long term it is not good, right, to break your trading plan. So on Wednesday it was a very, as you can see, the market literally played out to the T. Our supply zone got mitigated. This is exactly what I want to see in the markets to take a trade. But obviously, as I've told you a gazillion of times now, that this didn't happen at our timing. And as you can see, when the market was going to the supply zone, it was very bullish on the hourly, right? So it doesn't take time to reverse, because obviously there are huge amount of, we are anticipating there are a huge amount of institutional orders right around here, which we can write. That is the exact reason why we take the trade right on these zones, right? So going on Wednesday, my bias was not clear, and also the trade was not at our timing, but it did play out. But until now, we can clearly see Monday we caught a beautiful trade. Tuesday was a no trade day. Wednesday we caught a beautiful trade again. So until now it is a very good week for us, because we already caught 2 trades, and obviously also patience played a very huge role on this week as of now. And now going on Thursday, we can clearly see my bias is again bearish according to how this candle closed. Bias is bearish on GU, and on DXY it is bullish. Why it is bullish? To go and fill up this fair value gap. Yes, you can argue that the daily has now filled up little bit of fair value gap and then now it's rejecting, but no, the majority are buying, right? This candle is looking like it's a bullish candle, so I will anticipate this daily fair value gap to get filled. So on GU I will look for sells, and DXY it was aligning to look for buys. So that is when I go to look for news. And also on Thursday there was unemployment claims so I have to watch out for that. But it's okay because we trade the London, so obviously on the London session there was no sort of news, so it was a very good week. You can see there was the H4 fair value gap, so before making a move to the downside, it also made sense to go up, fill up this fair value gap, and there was also a beautiful H4 supply zone right around here, supply zone mitigation, and then to the downside. But that would be a swing trading concept, and I personally I'm not a swing trader, so my analysis, my zones are basically on the H1 because of I'm an intraday trader. I want to catch those small moves, right, with a tight stop loss and learn from that. So obviously I waited for the Asian range to close, so the closest supply zone that I could mark was this zone right here on here on the H1, and this supply zone was valid due to this break of structure, or you can also argue no break of structure. This was no market structure shift because the market was already bearish from this low high and this lower highs, lower lows. So obviously this is a strong supply zone because it was already inside this range, this high and this low. So this made sense for me, this made so much of sense for me. So that is when I waited for my timing, which is my 7 to 10 a.m. UK time. I went to the M15 time frame. On the live markets, obviously I would go to the M5 time frame because that is where I execute my trades, OT level entry, right? So there was inducement right around here at our timing. So on this day the MAC model started from this 11:30 right around here, but obviously this rejection was not enough. Even this rejection, I would anticipate I would take a trade here, so I would lose my first position right around here. But because I believe in my strategy, what I would do, I would take the entry again, and that is when I would catch a beautiful 1:3 right around here. It was a MAC model. I will journal this trade. This trade is what I will journal because it happened. The Asian high got swept, the order block got mitigated, it was at our timing, so everything you want to see in a trade was here, and it was a beautiful move. And whenever the price is going at your direction, like, let the winners ride, right? There's a slogan in trading: cut your losers early and hold your winners. That is how you become profitable, right? So it was a beautiful trade, as you can see. So going on Thursday, got a beautiful trade again. So on this week now, Monday we got a trade, Wednesday, Thursday, 3 trades in a row, right? If I was to take a trade with a daily bias, this week was a very profitable week. I will make a shit ton of money in this trade on this week. So now going on Friday, the last day of the week, obviously if it was a bearish week, what made sense was to go and make the high of the week first, low, and then a reversal, right? This is a bearish weekly profiling. As you can see how Thursday closed, Friday also made sense to go to the upside. So going on DXY, we can clearly see now it has filled up the fair value gap like 50%, and now the wick is bigger. On Wednesday the wick was very small, so I was looking for buys, but here now we can see it has filled up more fair value gap, and now a beautiful rejection is happening to the downside. So that is when I was looking for buys on GBP USD of how this candle closed. That is when I go to the 4-hour time frame to look for any market structure shift, because that's the same thing I do again and again and again. Now it is in my brain. Literally my subconscious has taken this because I'm doing the same thing again and again and again and again and again. So this H4 fair value gap now is here. So on the H4 time frame we don't have any market structure shift. That is when I go to the H1 time frame, as you can see. So on the H1 time frame, like when I'm explaining these weekly breakdown videos, right, there are so many things that I can't explain in this one video because there are SMTs, there are highs and lows, there are live trading, like live psychology, right? There are so many things you have to go through in trading, like that can't be explained in a video. You have to do it yourself, like SMTs, and on the live markets how to execute and how to wait patiently. All of them are skills, right? So on Friday I was looking for buys. Obviously before the Asian range close I can't do nothing, or I don't do anything. There was a demand zone right around here on the H1, and that is when I waited for the Asian range to close. The Asian range closed something like this, and after the Asian range is closed, that is when I go to the lower time frames like the M15 and look for my entries. I was looking for buys, so obviously, and there was the M15 demand zone here. I anticipated this to be the continuation model. As you can see, it also happened at our timing. The market came down to filled up the fair value gap and then gave the move, but I didn't take the trade there because obviously it was Friday, and also it didn't make sense for me to take a trade on Friday, which was a continuation model. Obviously this could have worked 100%, this could have worked, but I didn't take the trade, simple as that. So then I waited for the New York session. This is exactly when you need to wait for New York session to trade, right? Clearly you can see there the on London session, my bias was clearly bullish, first of all. So I was looking for buys from this sort of demand zone right around here. And also the momentum on the previous day was very, very high. So I was looking for the closest zone. So on London session, the move didn't happen. Instead, what happened on London session was to the opposite move happened on London. So whenever the opposite move happened on London and the bias is bullish, that is when I tend to trade New York, like I did on this day. Beautiful buy opportunity on New York. I entered the trade somewhere around here at this retracement, at this rejection right around here. Beautiful. Our New York session started here, and if I would enter the trade here, it would be beautiful. New York session started here, made a move to the upside, and then at the higher low, entered the market. If I entered this trade, it would be a 1:4 risk to reward. So on this day, on this week, literally every day was a trading day. Instead of Tuesday, if I followed my daily bias, if I followed my strategy, and this week alone would make me so much of percentage and would make me so much of pass me so much of profit from challenges, bruv. 1 week like this kind of weeks will come in the markets if you show up every single week, right? And literally take the trades. So this week was a very, very profitable week, as you can see. And yeah, weeks like this will obviously come in your trading. You just have to be patient and show up every single day. But on Friday also, there is one more thing. There was a demand zone right around here on the M15 which didn't got mitigated, right? So there is also one thing. So this trade was not valid as of, it was a banger trade on Friday, New York banger trade on Friday. This is exactly what we want to see on New York session. If London session doesn't give us the move and my bias is clearly to one direction, that is when I trade New York. And also, if London session has not given a big move, right? Asian low got swept. The London session didn't give a big move. The retracement happened. That is when on New York session, after sweeping the London buyers, that is when I tend to buy again on New York session. There are two sort of models that I look for on New York, right? This is one of them, and one that I've just explained. So obviously it is in my brain. So obviously if I see it in the markets, I will take them. And yeah, it was a banger trade, and I didn't execute this because my demand didn't got mitigated. As you can see, the move did happen from our anticipated zone, but this was okay. If I read all of this, it will become a very, very big video, and I will take a screenshot of this and I will share it in my Discord, okay, so you guys can see it.